Thanks for visiting my channel. Topic of today's video is how to gift property to your children in your lifetime. Today we are not talking about leaving property in your will so property can go through your estate upon your death, or adding children to the title of your property as joint tenant so you can bypass the estate to avoid probate fees. That's a topic for another video. Before we get started, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. If you think you'll learn at least one new thing from this video, all I ask is to like this video and subscribe to this channel so it encourages me to produce more valuable contents for people like you. First and foremost, before you start thinking about gifting or transferring property to your child, make sure the cost of the property you are transferring in your lifetime is not your entire estate, and your retirement income needs and healthcare costs for both you and your spouse are fully funded. Gifting a property should be done through a lawyer using a legal document called Deed of Gift. This allows the parents to gift the legal and the beneficial ownership of the property to adult child without any monetary considerations. Parents must obtain the approval from the mortgage lender before gifting property to a child, as the mortgage lender may require the child to assume the mortgage. Land transfer tax might also have to be paid, as the transfer of title of the property to the child happens through the provincial land title office. By gifting the property in their lifetime, parents have the benefit of seeing the children enjoying the property while they're still alive. Security of knowing that the property has been dealt with and they've been able to reduce the size of their estate. Also, benefit of gifting your property in your lifetime helps your child when they need your help the most while they're starting their life and looking to purchase their first home. There is no point of leaving property to your children when you are in your 80s and your children are in their 50s, because they're probably already established and they probably don't need your help. There is no gift tax in Canada, but there's a number of things you have to keep in mind before gifting property. Let's first discuss the implication of gifting primary residence to your children. When you gift principal residence, gifting of principal residence is exempt from capital gain tax due to principal residence exemption under the Income Tax Act. CRA doesn't specify the exact duration of a time an individual or their family member must reside in the property to qualify as a principal residence for a calendar year. CRA uses the term ordinarily inhabited for a property to qualify as principal residence. Please note, only one property per year per family can be designated as principal residence. Recreational property or cottage can also be designated as principal residence as long as owner or their family member has ordinarily inhabited the property for each of those calendar year where you're claiming the principal residence exemption. If parents own multiple properties, it makes sense to designate the property with the highest average gain per year of ownership. To sum it all up, when qualifies, principal residence stays tax-free in your lifetime and passes on to your beneficiaries tax-free upon your death. Now let's discuss what are the implications of gifting rental property to adult children. When parents gift recreational or rental property to adult child, although there is no gift tax in Canada, but there is a capital gain tax on what's called deemed disposition of capital property. This means that also there was no money was exchanged for the transfer of the property. Government will treat the transaction as a sale of the property at the fair market value. Capital gains tax will be payable by the parent on the increase of the value of the property from the date parent acquired the property to the date when parent gift the property. If parents own the property for a long time, capital gain tax amount could be significant. You might be able to spread out the tax impact by gifting the property in stages, like transferring 20% of the property each year by adding the child to the title of the property as tenant in common. Parents should also consider the impact of other taxable income in the year of gifting to reduce the capital gain tax impact. You can watch my video 10 ways to reduce capital gain tax on the sale of rental property after watching this video. Please also note, if the parent gift property to a minor child who is under the age of 18, any income earned by the property after the transfer will be attributed back to the parents until the child turns 18. But any capital gains or losses incurred by the minor child on the further sale of the property will not be attributed back to the parent. There is also a myth out there that you can gift the property at any amount you like to avoid capital gain tax. That's not true. In fact, gifting the property for less than fair market value can result in double taxation. Let me give you an example. If you gift a property to your child for your acquisition cost of $100,000 to avoid capital gain tax, but the fair market value of the property is $200,000, CRA will make you pay capital gain tax on the difference between $100,000 and $200,000, but your child's acquisition cost will still be $100,000 for tax purposes. When child subsequently sells the property in the future for $200,000, child will pay the capital gain tax on the difference between the acquisition cost of $100,000 and the sale price of $200,000. This means the gains on the property got taxed twice. First, the capital gain tax was paid by you when you transferred the property to your child, and then capital gains were paid again by the child on the further sale of the property on the same money. Careful consideration should be given before gifting property to your children in your lifetime. First of all, parent will lose control of the property. If that's something you're not ready to do, you might want to transfer the property to the trust where child can be a beneficiary. Trust will provide income to the beneficiary but allow the parents to retain control of the property in their lifetime. Gifted property could also be exposed to the creditor of the child if the child was to go bankrupt. Gifted property could be subject to the division of family property in case of child's marriage breakdown unless they have a prenuptial agreement in place which excludes the gifted assets. One way to avoid the associated problem with creditor or marriage breakdown is to loan the money to the child for the property instead of gifting the property outright by carefully drafting a legal document. If parents' goal was to leave equal amount of assets to all children when they die, by gifting the property early might make it more difficult to document and equalize assets among all children. That's all for this video. If you think information like this can benefit someone, please share this video with somebody you know. Also like, comment below, and consider subscribing. Thanks for watching and see you in the next video.